This video is brought to you by Blackwave. Managing Forex accounts since 2015. Click on the links in description to open your own managed Forex account. Credit Suisse, one of the world's leading financial institutions, has just been acquired by UBS with the blessing of the Swiss government. It recently suffered a major setback when it announced the suspension of $10 billion worth of funds linked to failed supply chain finance firm Greensill Capital. This news came on the heels of the bank's announcement that it would suffer a significant loss related to the collapse of US-based hedge fund Archegos Capital Management, leading to a substantial drop in Credit Suisse's share price and raising concerns about the bank's stability. The collapse of Credit Suisse has sent shockwaves through the financial world, leading many to question how a bank with such a strong reputation and history could find itself in such a precarious position. One key factor in Credit Suisse's downfall appears to be its involvement with Greensill Capital, a company that specialized in supply chain financing. Credit Suisse had invested heavily in funds managed by Greensill, which provided short-term loans to companies that were waiting for payment from their customers. However, in early March, Greensill filed for insolvency after its major insurer, Tokio Marine Holdings, withdrew coverage, citing concerns about the company's creditworthiness. As a result, Credit Suisse was forced to suspend the funds, leaving investors with a significant loss. The Greensill collapse was not the only issue that Credit Suisse was facing. The bank had also been involved with Archegos Capital Management, a family office run by former Tiger Management trader Bill Huang. Archegos had built up a significant position in several companies, using borrowed money from a number of banks, including Credit Suisse. When the value of those positions began to fall, Archegos was unable to meet its margin requirements, leading to a forced liquidation of its holdings. Credit Suisse was left with significant losses related to its involvement with Archegos, which is estimated to be in the billions of dollars. As of March 2023, the failure of Silicon Valley Bank of the United States appears to have finally exhausted any and all remaining confidence in the ability of Credit Suisse to manage its difficulties, and the takeover by Union Bank of Switzerland is likely to result in significant reorganization, and duplication will likely result in many job losses. The collapse of Credit Suisse is not just a problem for the bank itself, but it has also had wider implications for the financial system as a whole. Credit Suisse is a major player in the global financial markets, and its failures could cause other banks to reassess their own risk management practices. There is also a risk that investors could lose confidence in the banking sector more broadly, leading to a wider sell-off in financial stocks. In conclusion, the recent collapse of Credit Suisse has raised a number of concerns about the bank's management and risk controls. While the exact causes of the bank's problems are still being investigated, it is clear that the bank's involvement with Greensill and Archegos played a significant role. The bank's response, including the launch of an internal review and the departure of several top executives, was simply not enough to reverse the loss of confidence in the banks. They needed more time, and that simply wasn't available. However, the wider implications of the bank's collapse for the financial system as a whole remain to be seen, but in the short term the collapse is causing a revisiting of European bank valuations. Brought to you by Blackwave. Managed Forex accounts since 2015. Thank you for your attention, and stay safe trading out there.